Hello everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at some of the hottest stocks in play today. Okay, so first up we're going to take a look at ticker symbol SDRL. These are going to be the small caps in this video, and so these are all the penny stocks that we're running today. First up is SDRL. Like I said, closed up over 26% today. Very nice move. Yeah, this was one of our chat plays that delivered nicely, kept pushing up into the close, so congrats everybody. You can see you've got RSI up here at 78, so this is a very frothy level for RSI historically for the stock. You can see on Fasto, it did pull back in the black line cross below the red line. That is a sell signal, okay, so that it's going to have to stay above that 80 level. You've got a plus DI really pushing here. It's getting a pretty perpendicular line. You know, when that happens many times, that signals it's getting frothy and pulls back. So historically what happens with SDRL is when it gets a close well above the upper Bollinger Band, which is down here at 39 cents, it tends to work its way back into the bands. As you can see, that happened the last time it closed above there, happened again in February, happened in November, back here in was it September, and then again back here in July. So each one of these closes above that purple line, above the upper Bollinger Band, were followed by red candles. Okay, and then yeah, and I guess I missed this one right here. There was a little close right here in January, just above, and then a red candle followed. So the historic trend is for a red candle to form tomorrow. That was the call in the chat. We'll see if there can be a bullish change in trend. What you want to do is you want to, and like I said up here, anticipate history repeating, but keep an eye out for a change in trend. Okay, so that it could be a change tomorrow, and it could push higher, and this could be the one time that it really does break out. Now if it's currently hitting this high close from back here in September, the 48 level, it's going to need to break that, and then the high close from back in July of 2017, this high close here at that 52 level. If they can get above both those levels, that 62 high from back there in September will be the next target. Now, if the candles do work their way back in the bands, what would be best is if this blue line held. This is the 300-day simple moving average at 42. So on a pullback, you want to see that hold. If it dropped below, then what you want to see is this descending resistance line and EMA4 lined up here at this 38 level. You want to see that hold, and then that would continue the strong uptrend. EMA4 has been holding since this bounce down here off the middle Bollinger Band back here in the first week of May, and so as long as that pink line keeps holding, the signal is to keep riding. It's just with the historic trend having SDRL always selling off after it closes above the upper Bollinger Band. You know, this was a chart put out in the chat today, alerting our members to lock in gains into the close, and you can always jump back in, right? And so it doesn't hurt to or tomorrow, you know what I mean, if you're still riding, which I'm sure a lot of people are still riding, if you start seeing that red candle form, you know, that's going to be your signal that you know, it's pulling back. The only risk is that there's a gap down open, but you never know, it could gap up and keep running. Okay, let's look at the SDRL weekly chart. So the weekly chart's looking really good, and so if you're a longer term swing trader, you know, and you're planning on holding a longer period of time, just follow the weekly chart. There was a close above the middle Bollinger Band here the first week of April, and you could see each one of these candles have closed above the pink line. As long as EMA4 at 36 is holding, you know, the signal is just to keep riding. It signals the chart super strong. There was a close last week above the green line, which is the 50-week moving average, and then this week you've got a break above the top of this channel, so it's been in the sideways channel for multiple months. And so what you want to see is a close above the September and November high close, and then also a close above that July high close. If there's a close above these three levels for the week that this candle will set on the closing bell on Friday, it should signal more upside potential, and then the candles could work their way up here into this prior resistance zone and that 70 to 75 level, and then eventually you'd be wanting to, you know, for the longer term traders, you're looking for the candles working back up to dollar land, back up to that 100-week moving average at 125. What's really promising on this chart is that the candles are forming above the middle Bollinger Band, which is the 20-week moving average, and above the 50-week moving average. For our strategy, as long as both of those levels are holding and the candles are riding EMA for support, the signal is just to keep riding, you know, for a longer term swing trade. Now with this candle pushing well above the upper Bollinger Band, you know that it could end up, you know, testing that EMA 4 and then continue higher. You know, nothing goes in a straight line, and so we use the ebb and flows to be able to lock in profits. And then if you really like the stock, you can reload lower. Okay, let's look at EBIO. Closed up 24% today. So yeah, this made a really nice move. You could see RSI's at 69, and it did run up to 90 on this last big run. So and Fasto just broke above 80 for the first time. You could see the you know, last couple times it broke above 80. You know, it was able to get an extended run going. So this could be the start of the next push higher for EBIO. It closed, of course, right at resistance, because that's how the algorithms work. It's all about this closing price here on the 3rd of May. If it can close above that level tomorrow, that should signal that it wants to head higher. It's that simple. Above that level signals it wants to head higher. If it fails to hit that level, you know, break that level with the close above, it would be a temporary top. As long as the middle Bollinger Band down here at 266 is holding, the uptrend is intact. You've got a PSAR bull flip here. You know, it's trading above all the moving averages. You know, you've got the golden cross here with the 50 crossing over the 200, and then the 50 crossed over the 300, and you know what I mean? It's just a very strong chart with a big volume spike. And so what you want to see now down at MACD is you want to see that 8, 13, and 5 crossover and the 12, 26, and 9 crossover. If both of those MACDs have a crossover, a bullish crossover with the MACD line crosses over the signal line, that should be a clear signal that this is wanting to break out to that next level. If it fails to cross over, that would be a red flag. Now check out the big volume down here. This big volume is what you want to see when a stock is pushing higher. Okay, but you want to also look out for the climax spike. And so on this weekly chart, as I just said in the last for the last chart, you know, once it gets above EMA 4, the pink line, you know, and that level's holding, you could see how long EBIO has just been riding the pink line. You know, you could have just been riding this longer term and not worried about the little ebb and flows. As long as that pink line's holding, you can keep riding. The chart's super strong. Once they let it close below, that's when you could get a drop down to EMA 8. Doesn't even mean the downtrend's broken. It just means that it could possibly start consolidating and reload levels lower. You can see it's hitting this resistance level from back here in November, and it's breaking above this week. So you want to see a close above that level, and then the next target's the 200-week moving average at 394. That's going to be the big level to break. If it can get above that, then you have the close over here in August of 2016. That high close around 475 to $5 zone. That's going to be the next big level. So it's all about busting through, you know, staying above this 325 zone, getting through 350, which there isn't a ton of resistance in here. You know, there's going to be some resistance, but there's not a ton, and because it was straight up and down through that section. But it looks like it could make that push up to that 200-week moving average. If that does turn into, you know, fails to break that level, that could signal a temporary top on this big run. Yeah, and when the candles, if they do end up correcting, what you want to see is that 100-week moving average at 189 hold. Okay, if you look at the 15-minute chart for EBIO, you can see it busted out above the moving averages today, and so getting above this 300 simple moving average was super bullish. You know, it was able to hold the EMA 13 on the dip, and then into the close, it did close above that middle Bollinger Band. You want to see that level hold tomorrow at 327. As long as that's holding, you know, that's going to signal more upside. Then you want to see a break above this 375 to 340 level. That should signal it wants to head higher. If it dropped below 327, the lower Bollinger Band at 316 would be on deck. And then if it got a downtrend going, you know, they always retrace down to that 50 simple moving average. So you'd see this $3 support zone tested. Okay, let's look at PTIE. This ticker symbol had a big breakout today, closed up 16% on very light volume, only 300,000 shares traded. Just have RSI at 81 and Fasto at 96, so it's pretty frothy here. You know, you did have a crossover on plus DI. It is pushing well above the upper Bollinger Band, and so if the candles do work back in the bands, you want to see EMA 4 at 965 hold. As long as the candles are right in that pink line, you know, it's signaling the chart super strong. As long as the middle Bollinger Band at 841 holds, then the uptrend is intact. You can see how it's been bouncing off of that middle Bollinger Band, you know, and so that's the bottom of the channel. The upper Bollinger Band is the top of the channel, so it's busting above that top of the channel, so it needs to stay you know, above EMA 4, but it could be getting ahead of itself with this big candle. You can see back here how it worked back into the bands after after it got above. It did have a couple extra days above the upper Bollinger Band, and it did here as well before it worked its way back in. But you just have to keep in mind when they push this hard, sometimes they take a breather. Sometimes stocks will take a breather. And yeah, if you look here on the weekly chart for PTIE, you could see here it's been in this really nice uptrend. You know, it's been cruising ever since the January, and so it's breaking the bottom of the gap level. There's a gap between high of day on this high of day on that candle and low of day on this candle up here, and so it's trying to break above that level this week. You could see back here in January was the last time it got above this level, but it failed to close above and it pulled back. And so a weekly close above this 993 level, that's going to be super bullish. Okay, so that's going to signal more upside potential, and then we'll be talking about a gap fill. Now it is coming right up to the next key resistance level, which is the 200-week moving average at 1118. It's going to have to close above that level and turn it into support to head higher. As you can see back here in January when it hit the 100-week moving average, it stalled out, and then it took several months before it finally broke and headed higher. So keep that in mind. This will be the lock-in gain zone if it fails to close above and stay above. Okay, and if it does get above, then what you're talking about is a potential gap fill and a run up to this 300-week moving average, and up to that 17 level would fill the gap. Because there's a space between these two candles, and sometimes, many times gaps do get filled. Okay, let's look at IPI. This is a potash ticker symbol. Okay, and so the fertilizer is hot right now because this is spring planting season. This is the season, and so you could see where this thing's pushing super hard. It is on a multi-day run. We did alert it at lower levels, and it kept pushing higher. So congrats to everybody that is trading this. Today there was a nice development. It did close above this this double top level. It made a top in January, and it came up and it topped again at that level and pulled back. And so today it broke above that level where there was tough resistance from January and December, and so that close above this high close horizontal resistance level it is signaling more upside potential. And so what you want to see, if the candles did work back in the bands, you want to see this level turn into support. It needs to stay above this 485 level. Once you break above a key resistance level, you want to see it hold if tested. Okay, so it is pushing hard here, so I can't recommend chasing this, but keep an eye on it. This is a stock that we've been charting in the chat. A lot of these plays that I've gone over, yeah, pretty much almost all these I believe I charted today in the chat, and we've been charting over the last, these are just stocks that we follow, and so if you check out the chat, you'll be able to check all these charts out in real time, and then you're not getting the information late. But yeah, now this is busting through the upper Bollinger Band. It could take a little breather. This candle right here, you can see how it worked its way back here. It took a little pause here. So it looks like it wants to break out higher. You can see the upper Bollinger Band is pushing up. It does have Fasto at 98, and you've got RSI at 69. And this has a hard time staying above 70 on RSI, so you have to keep that in mind. But this could be the start of a next push. It might take a breather first and then keep pushing higher. We'll just have to see how it goes. As long as EMA 4 at 465 is holding, the chart is still super strong. It looks like that gap did fill. So I want to show you the weekly chart. This shows you where the next key resistance is. This week, it's trying to break out of this multi-month sideways channel, and so right now it's busting through the top of the channel, which was the high close from back here in December. And so if it can close above that level for the week, that's going to be super bullish. All right, so that's going to be like around 475 or so, and then what you're looking for now is a run up to the 200-week moving average at 567. That's going to be a big level to break. It was able to carve right through the 50 and 100-week moving average. There was hardly any resistance at the 100-week moving average, just blew right through it. So we'll see what happens when it hits this 200-week moving average. If it has a temporary resistance there, that would be the take profit zone. And then if it was able to close above, that would signal that it wants to keep pushing higher. You can see this crossover here where the 50 crossed over the 100. See how the 100 and 50 simple moving averages are hooking up. The 50 is headed for a golden cross with the 200 here. So the chart is in a very nice multi-month, going on a multi-year uptrend, that started back here in November of 2016. And so as long as it keeps holding this 50-week moving average, the uptrend is intact. It went sideways for a while. It's interesting now because it's breaking out, but keep in mind it is on on a multi-day run. Okay, let's look at VKTX, closed up 12% today. So yeah, it has 63 on RSI, so it has more room to run until overbought levels. You can see plus DI is just heating up. You know, you've got check out how ADX crossed over minus DI, and so the chart's heating up here. It did close above the 50 and 100-day simple moving averages. That's the green and gold line. So that close above 510 is really bullish. All right, so you want to see that 510 level hold and then break through 530 resistance, and then this uptrend can continue as long as the 50-day simple moving average at 472 holds. You know that this is going to be a super strong chart. It has to stay above that 100-day simple moving average now. You know, if it were to drop back below, that would signal some consolidation that it's not ready to go. But keep an eye on VKTX. You know, it's the chart's really heating up. It just needs to stay above support there, and it can keep pushing higher. Let's look at BLNK, closed up nearly 32% today. So yeah, this has been filling this gap over here. There's a gap between low of day on this candle and high of day on this candle, and so you know, it's working its way to the top. There was a gap up open today, so there's an unfilled gap between low or high of day yesterday and low of day today. So you know, once this pulls back at some point, that gap is likely to fill. Keep that in mind. If you look up here, there's you know, it looks like I can't tell where the lower wick is on this candle. It looks like there is a lower wick, but it's with the yeah, so basically the top of the gap is the bottom of this candle. I can't tell if there's a lower wick or not on that, but if it runs up here to the 200 and 300 day simple moving averages, currently here between 814 and 869, then that would fill the gap. Okay, so keep that in mind. So this is going to be a huge resistance level to break, and anytime you fill a gap, that is a climax event. So more than likely, this will be the take profit zones. Now, if it does break out higher, like it did over here, you know, that continues the run like it did in January. But just keep in mind that this is always going to be a tough level to break. Okay, so you know, has to get above that 870 level to keep the run going. Nice move today. As long as notice how EMA4 has been holding, even though it's a very odd chart with, you know, jumping around with black and red candles, but notice the entire time that pink line has been holding, and so as long as it's holding, it's signaling the bulls are still fully in control. So keep that in mind. All right, let's look at VVUS, closed up nearly 27% today. This was a nice close above the 200-day simple moving average. That's the red line here at 64. So this has a very nice uptrend going. All right, it broke above the 50 and 100-day simple moving averages. It's right above EMA's 4, 8, and 13 support. Today it closed above high close resistance from March. That was super bullish. If it can stay above 64 and break above the 70 level, which was, you can see there was some consolidation back here in November. There was a little sideways action. If it can, you know, you can see it topped out right there at the top of that channel, which is 70. If it can get above that, then the 300-day simple moving average at 80 will be the next target. Notice the big volume here. So big volume spike behind the move, has good volume, it's breaking resistance. Yeah, it just, as long as it's, you know, right now when they get above a moving average, like the 200-day simple moving average, they have to stay above. If they drop below, similar to right here, you don't want to be holding. You know, broke above, failed to hold, and then close below, and then look what happened. So that's why when they trade above a key level like this, if they close below, you want to exit. You don't want to be holding, because it could work its way all the way back down to here. You know, it's very, very important that it stays above that 200-day simple moving average. Okay, let's look at VNET. Closed up 24%. It has RSI at 65. Yeah, Fasto at 97. There's a bullish crossover here on the ADX with the green line crossing over the red line to the upside. So this chart's been heating up. It had the close on Monday above the middle Bollinger Band, and that was your clue that the chart was heating up. You know, that was the first close above the middle Bollinger Band since way back here on the 19th of March. And so that was the last time that it was bullish. You know, it was trying to get an uptrend going. That was the last day it closed below, and every single one of these candles is below that dotted purple line until this one. So this was your signal. This was your alert. Okay, yeah, this is in play. Even though there wasn't big volume, it was a signal that this thing's heating up. Keep an eye on it. Take a position. Use the, if you want, and use the middle Bollinger Band there as your stop loss level. You know, as long as it closes above that level each day at 550, then the signal is to ride. When you enter on a break above the middle Bollinger Band, you use that as your stop loss level, and it's just about the close. As long as it keeps closing above that level, it could trade below intraday like it did on this doji yesterday, but it did close above. It closed right at that level. It just signaled to stick with the trade. If it were to close below, then you'd want to exit. And so today, everyone that was rewarded that loaded the last 2 days, big volume came in. Everybody was like, oh yeah, this really is a good play. And then notice it broke above the 300, the 50-day simple moving average, and then it hit that 200-day simple moving average at 687. You know, that's lining up with this resistance over here. And so yeah, basically it's got to break above this 200-day simple moving average, and then if it can get above that level, the next target's going to be the 100-day simple moving average at 743. That is the top moving average on this chart. Once that level turns into support, it can break out higher. You know, if it is busting through the upper Bollinger Band, and it has these 3 moving averages it's trying to break. If it did work its way back into the bands and it dropped below the 300 simple moving average at 634, that would signal consolidation. You could get this kind of action over here where it worked its way back, and then you know it's only going to be a good play if it stays above these 2 levels and then breaks above that level. You know, it stays above the 50 and 300-day simple moving averages and then breaks above the 200-day simple moving average. If it were to drop below those levels, then you might be trying to play the bounce off of the middle Bollinger Band. Okay, let's look at ASNA. So this has been on a really big move, closed up 12% today. RSI is at 84, so it's super frothy, and Fasto's up here at 88. Check out all those white candles in a row. It's been pushing. It's on a 7-day run here. It did close well above the upper Bollinger Band, and it has that kind of climax spike looking volume spike here. When you have the increase in volume and then a big volume bar, many times that signals the top of the run. So we'll just have to see here. It's a super strong chart, just it's looking a little frothy. If the candles work back into the bands, you just want to see EMA4 at 284 hold. As long as that level holds, the uptrend is intact. It's trading above all the moving averages here. It broke out above high close horizontal resistance yesterday. You could see it's you know, there were these high close levels, and you know, it broke above them. And so breaking, closing above those levels each day was signaling that it wants to head higher. And so now that it has this climax look with the big volume spike, you got to keep a lookout for it taking a breather. And so, yeah, just keep it. If candles do work back in the bands, you want EMA4 support to hold. If you look at the weekly chart here, now this shows you the upside potential. There's a sideways channel for multiple months, and then this week it broke out of the top of the channel. That was the close here back in July, the high close, and so that signals more upside. And then now it's breaking above the close over here in May, and so you want to see it stay above $3. As long as it stays above $3, it should signal more upside potential. And then what you're looking for now is a run up to the 100-week moving average at 390. That was a prior support zone from back here in March through May of 2017, and so that's likely to be big resistance. But right now, when you're looking at this chart and you're like, where is this headed? When they're breaking out on the daily chart like this, many times you're going to find resistance on the weekly chart, and that's what we had to do here. We had to go way back to find the last time it was trading at these levels was back here in May of 2017. And so looking at this weekly chart, it is showing that it could run up to this 100-week moving average at 390. So keep that in mind. It is busting through the upper Bollinger Band this week, and so if it did drop below $3, that would be a red flag, and then you could see it come down and test EMA4 at 265, and that would still put it above the top of the channel. Now that it's above the top of the channel, it has to stay above that level. You don't want it dropping back into the channel again. It needs to be done with this and moving on, higher. That's what the bulls are looking for. Okay, let's look at CHEK here. Closed up 20% today. Yeah, this one got pulled back. You can see there was a gap down open. There's a gap between low of day on this candle and high of day on this candle, and then the candles work their way down. And so, yeah, the close today above the EMA4 is bullish, and so it needs to hold that level and then break above the bottom of the gap, which is currently at EMA8 at 498. If it can turn that level, if it can turn this EMA4 into support and get above EMA8, then it could run up here and work on filling the gap. It just has a bunch of moving averages to get through. It's got to get through EMA13, through the 50, through the 20, through the 100. I mean, they're just stacked up right here. So that always makes it tough when you have all the moving averages stacked up. But right now, it's all about getting above the bottom of the gap and then making a run to EMA13 at 561. Notice the big volume spike today. Take a look at BBOX. This closed up closed up nearly 20%. You can see RSI at 64, Fasto at 93, big crossover on ADX. Yeah, it's got a big volume spike today. You can see the huge volume. And then today it's hitting the top of the channel. The top of the channel is from back here in February and March, and it hit right up this 230 level. If it can bust above 230 tomorrow, look for a possible run up to the 100-day simple moving average at 252. And then, yeah, now I'm seeing an unfilled gap up here between these two candles. So if it can get above that 252 level, you could see it possibly try to run up here and fill this gap and test the 200-day simple moving average at 308. That would be the upward targets if you could get past the 100-day simple moving average. If it fails to get above 230, then that's going to signal, that'll be a sell signal. You wouldn't want to trade this because it's a very thinly traded stock, and so it's only going to be good if it can bust through 230. So keep an eye on that. And then another one, CGG, closed up 10% today. This is a thinly traded stock that's been heating up. It has a gap on the chart as well between low of day on this candle and high of day on this candle, and so it's been working slowly on filling that gap, and as you can see today, the gap finally filled. And so the close today above the top of the gap is certainly more upside potential. It has to stay above that level. Okay, so it has to stay above. If it can't stay above that level, you can see there's a small unfilled gap between high of day yesterday and low of day today, and so that gap is likely to fill at some point. Yeah, when they have a gap on a chart like this, they're setting you up for a pullback at some point. If it fails to hit this break through this 100-day simple moving average at 318, look for that gap to fill on a drop down to EMA4 at 277. If it can get above that 100-day simple moving average, then the 200-day simple moving average at 349 will be on deck. So yeah, so this is another thinly traded stock that they've been walking higher. So we'll see if it can break through resistance. And then finally, let's look at RUBI or RUBI. It closed up 11% today. Yeah, so keep an eye on this one. This is another one of those gap plays. They're really working the gaps here for the small caps. There's a gap between low of day on this candle and high of day on this candle, and so you can see the bottom of the gap is lining up with the high close horizontal resistance level, and so that's going to be the this is the big zone to bust through. And so if it can get through this level, if you see it bust through the top of this level tomorrow, the 200-day simple moving average at 256 will be the next level to break. So keep an eye on RUBI. If it gets through the bottom of the gap level and high close horizontal resistance level, and then bust above that 200-day simple moving average, it could possibly work on filling the gap up here at 330 with the 300-day simple moving average at 355. So yeah, keep an eye on it. It's up here at the top of the current pattern. Okay, so it's been working its way higher, and so yeah, it's got opportunity to try to test resistance tomorrow and possibly break out higher. If it fails to break that level, what you want to see is that middle Bollinger Band hold down there at what is that, 221. And so yeah, you just want to see this middle Bollinger Band remain support. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. I'll post the link below the YouTube video. All right, thank you.